This is all part of the huge gamut of different things that the PBOC is doing to stimulate the economy. Are they getting it right?
Well, whether they're getting it right or not, what we do observe is that China this time is taking a quite different stance to this downturn than it has done before, and also quite different from what we see in other countries. So they're just being still quite frugal in terms of spending a lot of money.
This is it. This is the marked difference that we have from what happened after the 2008 crisis, is it not? Which China is credited for spending and basically dragging the global economy from the abyss.
Yes, it is a very large difference. I mean, if you look at what is holding back a more forceful, basically a larger stimulus, it is very much the headaches that people in Beijing feel they are still suffering from as a result of these earlier bouts of stimulus. They are much more concerned these days about, financial instability, high leverage, and also if you look at who are in charge in terms of economic policy, the people with a strong background in finance, they are dominating this whole debate, and so therefore I don't really think this is going to change to a large extent.
So Louis, are they just relying on something that I was reading about earlier, which is called a revenge spending, that when people can move around, things get back to normal, they're going to see a huge spike and a rapid movement back for the Chinese economy itself? Or is it a case that there's an underappreciation of how much global demand has been falling or has fallen?
Yeah, I think it's really reached the combination of the two things. We do see that there are some people who would like to take revenge and do lots of spending. But if you look more broadly, there is a huge amount of caution. There is caution in terms of still contracting the virus, but also a lot of nervousness about the economic climate. And that means consumption is just still very, very lethargic, very, very subdued. And I don't think that's going to change very quickly. And then on top of that, you have that fact that the rest of the world is now sliding into recession. And so overall, the demand side of things is really holding back the recovery. We do think that China will, crawl out of this hole, but that crawling out is just going to take quite some time. And that means that this year we will see very little growth.
That's right. Obviously, first in, first out, like you said, but a lot depends on the demand from the rest of the world, which is pretty much still under lockdown. When you take a look at demand recovery, what assumptions are you making?
So we assume that on the domestic side, that things are improving, that overall we do see, increases in the number of people that are doing, buying stuff, also more slowly increases in that social consumption, which is spending on restaurants, tourism, these kind of things. But it's going to take some time. So we also, in our assumptions, we have noticed that it is easier for firms to basically decide that it is worth ramping up their spending and doing capex. So in our forecast, investment is a bit stronger than consumption. And of course, also the government side is looking quite strong in terms of the numbers. But so we have a gradual recovery on the domestic side. But then, unfortunately, we have very significant declines in exports for China. We have our assumption on exports is about minus 10% for the year as a whole.
Louis, when it comes to China, job creation seems to be more important than GDP growth itself. Unemployment at a record 6.2%. Do you see the Chinese government being able to rein in unemployment?
Yeah, Linda, I think that probably from where we are now, things will not deteriorate massively. But having said that, the official numbers vastly understate the amount of underemployment and people without a job, because the official numbers, they simply don't include a lot of migrants who sometimes still have stayed in their locality, their home province, haven't yet moved to the cities because they don't have a prospect for a job. So I would say the 6.2, which actually fell to 5.9, I think, after that, but still, that these numbers don't really show the pain in the labor market that people are feeling. And it's especially when we talk about this very subdued social consumption, thinking about restaurants, hotels, tourism sites, theme parks, all in all, these employ huge numbers of people. And so, therefore, the labor market pain is going to remain very significant. And I think that overall, we do not really see a lot of interest in China for massive stimulus. But I do think that recognizing this pain on the labor market, we will see some more targeted measures trying to alleviate some of that pain.